Hello, this is Will from JourneyWallStreet.blogspot.com. I'm here for the tick replay of CVH that was made on from June 11th, Monday, June 11th, 2012. So you can't see it from this replay, but let me fast forward a little. But CVH gapped down quite a bit. They were trading around 32.40s the night before, and and then they gapped all the way down to like 31.40. So pretty significant drop for them. Fast forward a little bit more. So as you can see here, it started to trade higher, and here's the 821 EMA. What I did was I kind of used this as a resistance type of trade. I thought, gap higher, run right into the 21 EMA, and it may just fall back down and continue to trade lower. And I was wrong. Boom, stopped out. Okay, so it wasn't going to be resistance. So let's just see what happens to this trade. So now it's kind of being extended from the EMAs a little. So maybe this is bullish versus bearish. I think at this time I looked at many different time frames in the longer term, the analytical time frames, and I realized that everything was pointing to it being a strong stock. All the EMAs were rising. The daily looked great. It was bouncing off the EMAs, and it just changed my complete outlook on this, especially since the 21 failed to hold it down. So from that point on, I was definitely bullish on the stock, and I was looking for a way to get in. And once I started to see it trade kind of away from the EMAs, immediately I know, okay, this is going to be a pullback play, and I'm just going to wait for it to catch up to the EMAs and then find an entry point and get in. So here's the extension. Let me slow it down just a little bit, and here's the pullback. So what I want to see, I want to see it continue to go lower, test the EMAs, bounce off of it, make a tail, and provide me with a very clear entry point. So now all I'm doing is sitting on my hands and waiting for that to happen. I don't need to get in here. I don't need to short it to go back to the EMAs. I know it's just gonna, if it's gonna pull back, it's gonna pull back there. And if it pulls back there, I want to be ready. Typically, I like to see 3 or more bars pulling back to the EMAs. 1 or 2 is enough, but generally 3 to really digest the move, and that way it can kind of coil up for a further extension potentially. So let's just watch it. I mean, ideally you want to see lower highs and lower lows. So here's a lower low, here's a lower high, and let's see what happens with this candle. Okay, it's getting, let me make this, stretch it out just a little bit. It's getting close. Okay, it's there. So do I want to just jump in right now while it's still ticking over? Not a chance. Because right now you're just buying a bottom. You cannot tell if it's going to keep going down and down. You want to see this. You want to see that. You want to see that tail. That's what you want to see, and you want to be able to. Okay, now that you see a tail, you want to buy as close to this point as possible with your stop below there. That's your idea right now. So if you can buy like 50% into the tail or somewhere along the EMAs, any of those entries would be great, because you know you're out. Here's your out. Okay, so now it's bouncing a bit higher. So if you haven't gotten in already, then your next possibility is this above this candle here. I know it's wide and I know it's far from the stop, but this is the entry candle. If you weren't aggressive enough to get down here or down here, then this is your next bet. So it gets close, but not quite there. And as you can see, it's starting to bounce higher above the EMAs. Okay, it came back. So maybe here would be your chance to get in if you weren't in already. And now you're just waiting to add. Right now the high is about 29. Boom, 32 here. That's your add. And you could kind of move your stop up now to this, since you know that these EMAs were the ones holding it down. Make that red. Yeah, I really don't like that candle, but you know, as long as it's above your stop, just relax. There's not much you can do. So let's see if we can find targets. Probably should be finding targets before I get into the trade, but worry about that another time. So, you know, here's the first potential target would be right here to just maybe lighten some this first retracement, and maybe you'll get to this second retracement. But for me, I know that the day before, the day before 40, 20, 32, that 40 was sort of like a support area, and it was also the previous high of the day. So I'm definitely looking to get out some here and potentially some here. So here are three areas where I'll take partial profits. And although I really don't like how it keeps trading below here and tailing, it still hasn't really made a wick lower than the previous one. So the lowest wick here is at 20 cents, 21 cents, 22 cents, and 23 cents. So still ticking higher, all these wicks. Let's stretch this out a little more. Oh, sorry. Okay, so here I would take some for sure. Here I would take some more, no question about it. And anything on top of this is sort of gravy. So I'm definitely going to move my stop up here and get rid of some of these lines now. Depending on how much, I mean, you could probably take more profits into here. I kind of just picked this candle, and okay, if it goes on top of that, I'll take profits there. And depending on what this candle does, maybe we can move our stop up from here to below that candle. Grab a few more cents in this trade. Let's watch it close first. Yeah, why not? Let's move it up. That's about a few more cents there. And boom, stopped out. So there you have it. Initially a failed trade here that just I thought that it was gonna go lower because it gapped down so much, but then you realize it's been trading above the EMAs all this time. So, and all the other analytical time frames says this is a bullish stock. So let's find a way to get in. And this wasn't a clear cut way to get in, but it was definitely something you could do, especially because the wicks kept making higher highs. And it did offer a kind of a breakout entry bar, although it didn't really break out very cleanly initially and took some pain before it actually started working. But once it did, it hit different target levels, and that's really all you can ask for. You get a gap fill, you get the fib retracement, you get a retest of the high of the day, and you just take what you can get and not hope for the home run every time. I know ultimately this was just a 20-30 cent move, but depending on when you got in, how you were sized, what tier you were in, and what you were expecting out of this trade based off of the risk here. Let's say you did get in at 19 cents or 18 cents. Your stop was 16 cents or 15 cents. That's only a 2-3 cent risk. You could get in at 1,000 shares right here and still be risking only $20 to $30. And with 1,000 shares from about the 20 cents all the way to around, let's just say 40 cents, that's $200 right there. You're risking $20 or $30 for $200, and that is some great risk versus reward trades. You'll take this every time. Thank you again for watching, and we want to see more trades like this.